Hello. Today we will get a brief introduction to banking. Okay, banking. Um, this video won't be that long, maybe 15 minutes, but you have a set of questions that you will answer after watching this video. My suggestion would be to print out the questions and have them next to you as you work through the video. You'll find them, they're all in order. But I suggest don't send me a picture of the paper, guys. I'm going to have a Dropbox. Write the answers with your stylus. Well, you could send a picture if you put it in the Dropbox. But it's easier just to put the answers on the file, on your tablet, and then toss it in the Dropbox. All right, so we're going to get introduced to banking. I'm going to go here. There's different types of financial services that we want to expose you to that have some different reasons for these financial services, okay? First of all, savings. Obviously, we've been talking about savings this whole term, right? Next would be payment services. These are things like you can use the bank to send money to pay your bills. All right, we'll talk about those. Borrowing. You can borrow money for a car loan or a home loan from the bank, obviously. And then finally, other financial services. These financial institutions, not necessarily banks, but there's different types we'll go through. You can buy life insurance and all sorts of other things besides these three. So we will go through those as we work through the PowerPoint. All right, savings. Why don't we save our money in the mattress, right? We need a safe storage of funds. Right? We'll learn later that if we have our savings in a government chartered bank, our savings will be protected by government insurance. Okay, so it's a safe storage of funds. Now, these savings, there will be different ones we'll talk about that are called time deposits. We're going to leave money in this financial institution for months or years. Okay? So this is something that will come up. And the longer we leave it in there, maybe the higher interest rate we can get. Okay? All right, here's what I mean by payment services. And I do this all the time. I'm able to pay bills through my checking account. I no longer have to handwrite a check, put it in an envelope, put a stamp on it, and mail it. I can transfer money from my checking account to businesses where I owe money. I can even send money to individuals, right? I am in Bank of America. They have what's called Zelle. I can send money to individuals for no fee through Zelle. Right? Which is, for all you guys who use Venmo, very, very similar to Venmo. Okay? Now, if we have this checking account, gang, we call it a demand deposit because I can withdraw money at any time or on demand, they say. It's called a demand deposit. Now, you'll notice as we move forward that the longer when we compare different places to save our money, checking accounts get very little interest because of this demand deposit. Banks can't necessarily count on your money to loan out to other people to get their interest. So you'll get very little interest on these demand accounts or demand deposits. Now, let's talk about if we had to borrow money. Right? If we had to borrow money, short term, credit card is an example of borrowing money, right? You're using someone else's money to buy what you want. And then there's places I could go to get a personal cash loan. That's short term. But if I have longer term examples of that, and this is where I might go to my bank or my credit union, a mortgage or an auto loan, right? A boat loan, etc. Excuse me. All right, moving on. Here's what I was alluding to when I said other financial services. You can buy insurances. You can use their investment folks there to buy stocks and bonds, right? Make investments. You can pay them to do your income tax services. You can pay them to help you with your financial planning. There's a whole host of financial services at these financial institutions, okay? Now, electronic banking services. This is what you've been doing your whole lives. The rest of us, this was newer to us, except this one was here. When I started working out of college in 1986, I believe they did have direct deposit at the time. So that's an automatic deposit of your net pay, not your gross, obviously. They take out taxes and such, to an employee's designated bank account. Now, it's a safe way to transfer funds, and it saves you having to go to the bank to deposit your money. So on payday, if today was payday, all you would do is you'd look online at your bank account, and you'd see that money sitting there. You know, NDP paid me this much money today. Actually, today is payday, so that's nice. Think of it too, when you take a check, if you don't have direct deposit, and maybe some of your really small businesses don't, you go get a check. Tommy worked at Zap Zone, he had to pick up a check. But the longer it takes for you to deposit that check, the longer that money belongs to the business. So they're getting the interest on it until you deposit it, right? The faster you deposit it, depending on how much interest you get in your account, you get the interest. So this really is a winner for the working person, okay? Automatic payments. Here's what I talked about. You can have your bank withdraw amount of your monthly payment and send it right to the businesses. You can have it automatic, or you can go in and do a one-time. Right? If I get a bill in the mail, it's just a one-time bill, I can plug them into my bill pay on my Bank of America account, and they'll send the money. It's pretty handy. All right, let's talk more about electronic banking services. Automated teller machines. These are called ATMs. Now, side note, it's not an ATM machine, it's an ATM. My son Matthew didn't want me to harp on you guys about it, but I want you to sound smart. It's not an ATM machine, it's an ATM. Okay? So, that's a computer terminal that allows you to withdraw cash. In fact, you can deposit cash. You can deposit checks through your ATM. You can check balances. Okay? You need a debit card. So that's a cash card. Now, you have what's called a personal identification number, or PIN. Not a PIN number, but a PIN, right? The number is in there already. You use that PIN. Don't tell anyone your PIN. You should be shielding that touchpad when you put your number in, because that's what the bad guys do. They try to watch, they have cameras. Sometimes they, covertly put cameras at ATMs. You need to shield it so no one can see your number, okay? But this is a really handy thing. And the banks love it. Why do the banks love it, you think? They don't have to necessarily pay a teller, right? You can go do that stuff. They don't have to pay the teller. And you love it because you can go do that stuff any time of the day, right? Or night. All right, fees. Let's talk about fees having to do with ATMs. You should be careful. Often, but you have to look at this. Before opening an account, check the fees. But like for my bank, I can use any Bank of America ATM, no fees. All right? If I go use a different bank's ATM, I may be charged a fee. And you know what, though? Sometimes it's worth it. What if there was none of your bank's ATMs nearby and you needed money? You might have to pay it, but you want to minimize that because that's just giving money away, okay? Now, lost debit cards. You need to notify your bank immediately. The bank is going to have certain rules that says you have so many days. But typically, right, if you wait longer than your bank's rules, how many days, you may be responsible for some money. Sorry, the dog's coming at me here. You may be responsible for some money. And if you never turn it in, your liability could be unlimited. They could go after you for all the unauthorized use of your ATM or of your debit card. All right. So considerations when you're savings. This is what I'm talking about. There's safety of your money at banks. Okay. We have this government insurance company, the FDIC, Federal Deposit Insurance Corp. That was established after the Great Depression, right? The Great Depression occurred, in 1929. People lost everything. They established this Federal Deposit Insurance Corporation in 1933. So you got to make sure you're putting your money at a bank or a credit union that has that insurance. Because if you don't, you're gambling a little bit, okay? And it's up to $100,000. All right, what kind of deposit institutions are there, right? Deposit, financial, right? We're talking about financial institutions. So where can I deposit? They're called deposit because you can deposit money in there. First, we have commercial banks. These are the Bank of America, the Chase, and so on. These are for-profit, meaning they have stockholders, right, that they answer to. They offer a full range of services, right? Checking, savings, lending. They serve both individuals and businesses. And they have a license by the federal government or the state government, depending on if they're national banks or state banks. Okay? Now, there are credit unions. You've heard of credit unions. Those are non-profit. Okay? Traditionally, these members have some kind of bond. Over by Oakland University, I believe there's a, Oakland University Credit Union. You have to have some tie to Oakland University to be a member, right? And use their checking accounts and such. But they really are a good place to consider when you're looking at loans and deposits, right? And looking to put your money somewhere. They often have lower fees on loan rates, okay, than those at commercial banks. Guys, they're non-profit. They do not have to answer to stockholders, okay? So that's important. They offer these lower fees. Credit unions are a really good place to consider when you're talking about like car loans and such. All right, there's other institutions that you don't deposit money, but they're still considered financial institutions. Companies that sell you life insurance, MetLife, right? They're always, you hear them on the TV commercials, right? Investment companies. They don't necessarily have you depositing money every week. They take your money and they invest it in a whole range of things. And then I think these are financial services companies, ones that help you plan your finances and your investments, okay? Now, problematic businesses. Stay away from pawn shops. It's really, it's a TV show where the guy takes, it's a pawn shop, he takes items and he tries to see the value of them. But these loans they give you are based on items you give them. It's jewelry. They say, what do I think the value of this jewelry is? I will give you this much money. Now, if you don't return with money to get that item back, they will sell it. But they charge way higher fees, guys, way higher fees than what I'm going to say other financial institutions. Check cashing outlets can charge anywhere from 1 to 20% of the face value of the check. Terrible, terrible, terrible. All right? Now, they do offer other services, but they're best known for check cashing. Payday loans. They say desperate borrowers pay annual interest rates as much as this and more. They'll write They'll write a $115 check to borrow $100 for 14 days. $15 for 2 weeks, guys. If you make that annual, you're going to see really large interest rates. Try not to do it, obviously. The payday agrees to hold the check until the next payday. They hold that check until you come back with $115. He only gave you